Today we ask the question, is strategy being even more transparent? And the answer is a resounding yes. They have done it again by taking feedback from investors and dramatically overhauling their MSTR and Bitcoin metrics dashboard on July 24th, 2026, shifting from gross to net figures to provide a clearer view of value for common shareholders. Hi, and welcome to Drama-Free Bitcoin, a calm and relaxed view of the Bitcoin market investment landscape. Remember, this is infotainment and not financial advice. You are responsible for your own investment decisions. Some of the key changes are that we see these new drop downs on the strategy page for different subsections. Bitcoin has been moved under the MSTR. We also see arrows on the side to move between different views. And one of the biggest changes is there's a new section at the top with a net reserve as the core valuation drivers, replacing the previous reliance on gross holdings. The company now highlights a net reserve of 35.56 billion. This is calculated by taking the gross Bitcoin reserve and cash, then subtracting the 22.3 billion in senior claims, which is their convertible debt and preferred stock liabilities that they have. So this new amount can be used in MNAV now and can also show a clearer picture, especially because they're constantly putting out more debt with the preferred stocks like Stretch. We also see a revised MNAV. The multiple to net asset value formula now compares the share price against the net Bitcoin per share price instead of gross holdings. The threshold for accretive equity issuance is permanently anchored at 1.0 based on these net figures. We see that they have a USD reserve that was recently increased to 3.225 billion down here as well. So really quickly about MNAV, this is now a new way of looking at this, where they basically take into account all their debt. So this is an actual much better way of doing this. In the past, you had to do a bunch of different complex math to find out what's the true MNAV and if it's accretive to shareholders to actually issue more stock. Right now, it's pretty clear that the company is being valued only on their Bitcoin holdings at this point, and adding anything beyond this as far as selling more common stock is not really accretive to anyone. So it kind of closes the capital markets to some degree to MSTR. Stretch is also trading way down at 86.89, so they can't really issue more shares of that. And sentiment has really dropped on all the other instruments as well, except for maybe Strife. So right now, it's going to be more difficult for them to raise capital. We're at the end phase of this Bitcoin bear market. So going into the next few months, it could get a little ugly for strategy. And this seems to happen at this time of the cycle. And then as we get into the next bull market, things should take off again. So I'd like to point out a few other new metrics that are on the second screen. So one thing we see here is we have new annualized return rate metrics that were added. And these are the BTC floor ARR, the BTC break-even ARR, and the BTC hurdle ARR. So the BTC, let's start with the break-even. Current value is 3.23%. This is the minimum annual growth that Bitcoin needs for strategy to fund its preferred dividends and interest payments indefinitely without selling Bitcoin or issuing new equity. So as long as Bitcoin goes up 3.22% from here, it will basically be able to pay for all the dividends that are owed to the preferred shareholders. If Bitcoin grows more than that 3.23% annually, the appreciation of the reserve covers the cost of the preferred stock like Stretch and debt interests for the convertible shares. The next one that we want to look at is BTC hurdle ARR. This is the amount BTC has to go up, which is 10.79% to actually profit. So this represents strategy's effective cost of capital. If is the annualized return Bitcoin must exceed for the company to generate a positive spread or profit for common shareholders. The spread is either above 10.79%, Bitcoin is outperforming the cost of debt, preferred stock, the leverage is working, and value is being created for common shareholders. If it's between 3.23 and 10.79%, the company is solvent and can pay its bills, which means it's kind of at a break even, and it is safe from restructuring. But the cost of capital is higher than the asset's return. In this zone, the leverage is technically dragging on potential returns, even if the company is safe. Below 11.5%, the structure is at risk of insolvency and it might need restructuring. So next, let's look at the BTC floor AR. The minimum return required to maintain a 1.0x BTC rating under the current capital structure. This is the survival limit. So the current value is negative 11.5%. This is the maximum sustained annual decline Bitcoin can suffer without causing Strategy's model coverage ratio to drop below 1.0. It's negative here because it's actually a safety buffer. It means Bitcoin could crash by 11.5% every single year for the next 5.8 years, which is the weighted duration of their debt. And Strategy would still theoretically have enough Bitcoin value to cover its senior debt and preferred stock obligations. The consequence is if Bitcoin's annualized return falls below this negative threshold, like for instance 15% a year for the next 5.8 years, the company states it may need to consider restructuring its obligations. It is not an automatic liquidation event or a covenant breach, but a warning zone where the capital structure becomes impaired. The recent changes were driven by the need for transparency regarding the company's evolving capital structure and recent market conditions. One of the big goals here is senior claims clarity. So, as Strategy issued significant amounts of preferred stock like Stretch and convertible debt, the gross holdings no longer accurately reflected the equity value available to common shareholders. The new framework explicitly deducts these senior obligations. The update incorporated investor feedback to better illustrate the impact of its digital credit capital framework and liquidity management strategies. With the stock trading at its net asset value around 1.0, the old model of issuing equity at high premium to buy more Bitcoin becomes less viable. The new metrics help investors assess whether the leverage is still beneficial. Thank you for joining me today. Look at the new updated Strategy dashboard metrics. If you would like to purchase Bitcoin and earn a sign-up bonus, check out the link to River in the description below. Also, please subscribe if you found this information valuable for more like this. Have a great day and stay calm out there.